Hello, everyone. No surprise on my end, but the market's character change followed through today. Another ugly distribution day across the board. And as I circle through all these indexes, it's quite clear to me that our model obviously is switching, to a full sell signal across the board. But the Dow Jones Transportation Average, ugly, ugly, ugly. The Dow Jones Industrial Average, ugly, ugly, ugly. Sell signal, sell signal. S&P 500, ugly, ugly, ugly. Sell signal. Um, Nasdaq, ugly. Sell signal. Fall through distribution day. Basically ready to close below the 50 and 200-day moving average. And the Nasdaq 100 is the last index holding up. But you know what? With today's distribution day, I doubt it's going to hold up for much longer. And the Russell 2000 weakness has it closing below the 50-day moving average, unable to ever get above that 200-day moving average. It was the big red herring, and it's unfortunate. But the good news is that there are a lot of long positions that I still have that with I'm raising stops again. So with this new operational sell signal, we're raising stops again, which means on most of the stocks that I went long earlier in the rally before the second uptrend in November started. So if I went long any stock from October to November, I'm going to be leaving with gains on them or flat. Like for instance, DY, my final sell stop is below that low a day right there. That will leave me flat from my entry signals on DY on the final half of the position. Now, new long positions, they're going to be small losses, but stocks, like MFlex, I'm moving up my final sell stop to the most recent basis low a day. So across the board, if there are any names with losses, the most recent low becomes the final sell stop. Like OCLR, we'll be leaving the rest of the position with a very tiny loss. And that's going to go like for Monster. So for Monster, for instance, this is no longer the final sell stop. Now with a close below the 20-day moving average on above average volume, these levels, so probably this low day right here becomes the final sell stop on Monster since I'm long from back here. So the bottom line is gains are not allowed to turn into anything more than small gains are not allowed to turn into anything more than tiny losses. If anything's a loser now, we got to move it up. For instance, like Cray, technically this is still the most logical support level, but based on my current position in that name, I believe the dollar amount loss will be too big. So now this low a day 33.46 becomes the new final sell stop level. So if there's any losses on the book and or no gains, we got to bring them all up to any low intraday move in the past 4 days in most of these names. There's a lot of them. So, for instance, EFSC, I still have gains on it, but my final sell stop is no longer here. It's here after this day. Because even if it does hold and starts to rally higher, this rollover isn't going to be worked off following this sell off anytime soon. So, it's just time to get out. And HELE, for instance, my new final sell stop is this low a day now of today's 50-day moving average breach. So, across the board, sell stops being raised. LXFT, this low, first sell stop, this or right maybe back here to move it up from this level to this level, but we cannot let stocks like LXFT go from gains to losses. So make sure you lock in gains. U-Haul is a fail, already out of it. Pega is a fail, already out of it. VA is a fail, already out of it. Hack is a full sell, using today's low a day as the final sell stop, still have some long. And A10 was a fail today. So ugly, ugly action. The oscillators are all also starting to roll over. So there is no positive divergence whatsoever in any of these indicators. And unfortunately, none of them are even close to being oversold. So expecting an oversold bounce following the selling that we've seen in the past 5 sessions, or 6 sessions really, I guess, in the overall market is not to be expected here. I know it seems like, man, we are oversold very, very short term, but intermediate term, we're not even close. Long term, neither. So until we get oversold on these oscillators, there's just no way I'm going to, think about, oh, well, we got to bounce here. So stops got to get raised. I know we took a lot of long positions, but that's a byproduct of this market. This has been one of the most volatile markets. And don't forget, I can't remember when, but at some point in August, September, and October, the volatility of the volatility got to its highest level ever. They've been measuring that, I'm not sure for how long, but for a substantial period of time, that the moves that we're seeing this year can be quantified as extremely abnormal, extremely volatile, extremely random, and extremely dangerous. And the fact is, at one point this year, I was up 20%. I believe after this crazy past month, I'm now down to about a 15% gain in my cash account. To be up 15% in this market is a miracle to me. But the sad truth is that's a barely a victory over the NASDAQ, which is what I follow. But when you compare it to the Russell 2000, it's been a successful year for us, despite only having a 15% return in the cash accounts. I've done one big favor. I've made Interactive Broker very wealthy. So that uptrend this year from Interactive Brokers, you're very welcome. This has been a very heavy commission year. I probably have averaged right around $150, which means I make 150 trades per month in commissions all year long for Interactive Broker. So congratulations, guys. You've gotten a lot of my money this year, but you know what? Compared to the gains, it's minimal still. If that would have been like E-Trade, we're talking about possibly $10,000 in commission now. And wait, what am I talking about? About $1,000 in commission. Wait, no, because it's going to be for the year, so about 100, so 12. Oh, geez, so that'd be about $10,000 to $15,000 per year instead of the 1,150 or whatever it's going to be this year. But insane market, guys. Sorry for all the trading, but I tell you what, on every single signal I took this year, if I wouldn't have taken it and it wouldn't have worked, I would have regretted it. And that shit still happens even on a day like today. SSNI basically flagged it, unflagged it on this day. I really like the signal on this day. Just didn't think that the price surge was strong enough with that volume surge. The BOP surge was fine. I like that. The volume with that price move just wasn't enough. And of course, now we're going to regret it, but whatever. So now we need to get to actual, we do have two signals, but both of them are basically bearish signals. I got a long and a gold name, RIC. It's not producing a pocket pivot point signal, but it produced one back here. And I was thinking about going long in the stock back here, but I kind of thought that, this move's a little wedgy, maybe some more backing and filling sideways, and then it breaks out. It started to happen, but today was such a weak day that, whoops, it broke out. So Rick is technically breaking out. If you want to be super safe, you can put your limit at 325. Me, I just want to get long, so my limit's going to be at 329, only 1% long position. This is basically a hedge against the current market because it's a gold stock. Gold stocks do good whenever the market's doing bad, not necessarily gold, but gold stocks. So Rick is one of the better looking ones. I'm long GSV on an end-of-day basis. Sadly for me, I did not have a lot of cash to put to work to that day. So on this day, in the cash account, not the margin account, long in the margin account, I went long only WB in that account. So GSV is not a position in one of my accounts, but it's good. And so there's confirmation to Rick's move. So 1% in Rick, first sell stop below 317, final below 310. And then once again, another pocket pivot point signal in UVXY, bullish intraday reversal, very heavy volume, and a big surge in BOP. I want to double my position. So I have 340 shares. I want to buy 340 shares. I'm actually underinvested, and technically I should be long 600 shares of UVXY if I would have taken these signals as I should have. That should have been, a long signal, regular one. That should have been a regular long signal on the 8th, and this should be another ad signal. This should be another regular ad signal. But the initial long signal, instead, what I did was the day before I got cut out of all my previous buy, and there was like only half of it left. So I just rebought back the half that I got cut out of instead of taking a full position in. And now, of course, instead of having 600 shares, I have 340 shares. But we'll double it, get up to 680, and we'll see what happens. But the market looks bad, everyone. Looks real bad. ETFs even show that. It's ugly out there. Do not be a hero. Our models are switching to sell signals across the board. Cash is king for new investors. It's still going to be a rough, I think, rest of the year.